MTN has reported a strong first half. The mobile operator is back in the black, reporting headline earnings per share of R6.45. That's from a loss of R2.56 previously. The group attributes the turnaround to strong commercial execution, disciplined capital allocation, and improved macroeconomic conditions. The performance has prompted the firm to raise its medium-term guidance. It sees group service revenue growth to be in the high teens. That's from a projection of mid-teens. MTN has announced major changes to its top executives' roles. Among the shifts is the appointment of Ferdy Moolman as CEO of MTN SA. He is currently the group's chief risk officer and will succeed Charles Molapisi. It's also been announced that Yolanda Cuba, who's currently vice president for Southern and East Africa, will step down from the group executive committee to become a deputy CEO and executive director of MTN SA. The changes come as the group looks to enhance growth and returns in South Africa. Absa has reported a 17% rise in headline earnings at the halfway mark. That's as credit impairments declined and pre-provision profit grew. An interim dividend of R7.85 has been declared. That's up 15% on a year ago. The lender says it's optimistic that its performance will improve slightly in the second half. That's likely to be supported by continued growth in non-interest income, as well as mid to high single-digit customer loan growth and customer deposits. The group sees return on equity at 15% by the end of the year. Thungela has suffered a profit plunge. During the half-year, headline earnings per share fell 80%. The drop is largely due to weaker coal prices. Nevertheless, the miner has maintained its interim dividend at R2. Looking ahead, Thungela says coal prices could remain under pressure in the short term, and this may lead to production curtailments as a way to help rebalance supply and demand dynamics. Orion's share purchase plan has raised 1.9 million Australian dollars for the copper exploration firm. That equates to around 22 million rand. The plan was strongly supported by South African shareholders. CEO Tony Lennox says the firm is working hard to secure the necessary financing needed to transition Orion to a producer. Talks are underway to rescue Goodyear's Eastern Cape plant and safeguard more than 900 jobs before a 2-month deadline expires. The factory in Gariga shut its doors on Friday after workers accepted improved severance packages. But NUMSA says it and the government are racing against time to find strategic partners that can take over the plant and keep jobs alive. Goodyear has agreed not to dispose of its property for 2 months to allow those talks to continue. The closure is a blow to the auto manufacturing heavy Nelson Mandela Bay economy, though the company will retain its sales, distribution and high-Q retail operations in South Africa. Further afield, Novo Nordisk's stock surged after the US FDA granted accelerated approval for its weight loss medication Wegovy to treat a serious liver condition. Positive news for the drug maker that lost more than 1/3 of its market value in recent weeks. Here's more detail in this report.
Shares in Novo Nordisk rose. Investors bought in after the company got US approval for its weight loss drug Wegovy to treat a serious liver condition. Novo stock was up as much as at the open. US regulators granted accelerated approval for Wegovy to treat a progressive liver condition called MASH. It affects around 5% of adults in the US. That was positive news for the drug maker, which has seen its value tumble. Investors wiped $70 billion off its stock 3 weeks ago after Novo issued a profit warning and named a company veteran as new CEO. The firm had become Europe's most valuable listed company after the launch of Wegovy 4 years ago, but its shares have lost more than 2/3 of their value since June last year. Markets are concerned the Danish drug maker is losing ground in the obesity drug race to copycat drugs and US rival Eli Lilly.
And China has extended its anti-subsidy investigation into European Union dairy imports by 6 months, showing little sign of let-up in a two-front trade war with Brussels and Washington. Let's take a look.
China on Monday extended its anti-subsidy probe into EU dairy imports by 6 months. It showed little signs of letting up in a two-front trade war with Brussels and Washington. Beijing said it had prolonged the investigation of some EU cheese, milk and cream products to February 2026, citing the case's complexity. The government's move comes after it extended an investigation into European pork in June, of which it's a major buyer, and after it announced duties on EU brandy producers in July. Analysts say China's seeking a lasting trade truce with the US and EU to preserve its export engine. That's as it struggles with the prospect of overhauling its economic model, with domestic demand still low. Trade tensions between China and the EU erupted in 2023. That after the European Commission launched an anti-subsidy probe into China-made electric vehicles. It accused Beijing of flooding the market with state-backed exports. Earlier this year, Brussels said the EU and China had agreed to discuss setting minimum prices for Chinese EVs instead of EU-imposed tariffs. The two sides have yet to reach a deal. China originally announced a dairy probe a year ago, a day after Brussels revised but did not cease duties on Chinese-made electric vehicles.